Thanks for joining us on the Market Day Report. I'm Marlon Bowling with you on a Tuesday. As we get ready to kick things off, we'll have the futures trade underway at the bottom of the hour. In the meantime, I want to talk about the background as we get set up for today's trade. And we'll go to the phones and welcome Rich Nelson of Allendale Incorporated. Of course, Rich is based in McHenry, Illinois, and thanks for joining us here, Rich, as we start out the second trading day of this week. Yesterday was a down day almost everywhere you looked. We only had about 2 contracts in the entire ag complex that had a plus sign, at least on the close yesterday. But overnight, things seem to be just a little bit firmer, maybe a penny, maybe at the most 2 pennies higher overnight. So what's going to be driving the market here today, do you think?
I'd say definitely stability in front of these reports we have lined up here for the end of the week. As far as Friday reports, we're still talking about the planting numbers as well as that quarterly grain stocks number. And heck, on the livestock side, even the hogs and pigs on Thursday will get people wondering if maybe we need to have a little stop and stall time of year, I guess, for maybe the next couple days here in front of us.
So on the grain side of things here, remind our viewers and listeners once again what you guys are looking for estimates and on the planting this time.
And planting side, looking at corn acreage of about 90.96 in this case, so basically 91 million acres, maybe about a million higher than what USDA was thinking here back in February. Soybean side, we're talking 88.2 million acres, still a good rise from last year's 83.4. And as far as wheat acres, lowest numbers in decades, 46.1 million is seen. That, of course, would be a decline from last year's 50.1.
Now, looking at this wheat complex, with all the rain that's expected to move into the southern plains here and benefit that winter wheat crop that's really been struggling from drought conditions here, do you think that's going to keep the pressure on the wheat market? Because we're only, I think, 10, 12 cents away from our contract lows, aren't we, on some of the wheat contracts?
That sure is right. We do think we're going to go back and probably retest those lows. This rain that we're going to be seeing these next few days is so important for us. This is actually the key yield determinant of the entire winter wheat growing season. Mm-hmm. So what we're going to see here next few days is a very big deal for us. And market also, in some ways, may have to still recognize some old crop excess supplies in the very short term. So, yes, we do look for a little pressure on the wheat price situation, maybe for the next couple of weeks here.
So we did see a little bit of a firmer trade overnight. Do you think that's just strictly technically related? Folks maybe lightening up on these sell positions a little bit?
And you've got to suggest something like that, especially after these past couple of weeks of trading on the grain markets, with this market taking this break in price based on the strong Brazilian crop and what could be now on the U.S. winter wheat side, maybe a rebounding yield situation. So with these issues in mind, yeah, I think that's the case right now.
So when you have producers out there that you talk with around the country, and maybe they have some old crop corn, old crop soybeans left that they need to market, but they'd like to get something done before they really get busy in the fields with planting season this year, what do you tell these folks?
You know, for a lot of the guys who are in that exact situation right now, as far as soybeans, we're suggesting, in this case, just move the product. And if we need to, we can do some reownership later on paper, with a limited risk type of option position, maybe later on at some lower prices. As far as the corn situation, if they need the financing, that's the big question for us on the corn side. If they need that money, then sure, they can do some reownership after making some cash sales. We still look for it at some point later on down the road, much better prices for corn. So we're not too aggressive in trying to get these long-term sales done on that side, at least.
And typically, when you have the volatility down as low as it is right now in the grains, that normally would mean the premiums are relatively cheap on the options, wouldn't it?
There's no doubt, and I'll be very clear. If we see this, if we do the same type of strategy, same type of discussion, just 2 or 3 weeks from now, as we're really getting into that planning discussion, pretty in depth, and especially with this forecast, maybe showing a little excess rain for portions of the western Corn Belt, northern plains, maybe we'll see some volatility push back into these markets here.
Okay, Rich, I'll bring you back here in a moment, and we'll talk a little about that livestock trade as well. Our guest, Rich Nelson of Allendale, will be right back.